you are taxed at the price that the tokens are when you receive the airdrop. So you actually should sell like, at least like a quarter, if not half of it right away.
What have you found the biggest frustration for those that are, crypto millionaires that want to exit but are facing the tax?
Yeah, I think that there's not nearly enough clarity on what exactly is going on in terms of crypto taxes. I think, particularly for something with like, airdrops, for instance. People, from what I've heard, you are taxed at the price that the tokens are when you receive the airdrop. So you actually should sell like, at least like a quarter, if not half of it right away, because if they tank, then you would potentially be, you would owe the tax at the price that you received the airdrop. I would be curious if you've looked into like, and this applies to like staking rewards potentially as well. And there's starting to be some new lawsuits going on about that. But I'd be curious if you've looked into this topic.
Not on the airdrop side of it, Bill, but it's a good question. But maybe I can correlate it to how we've done these, because people ask, well, how do you do this tax defer without incurring the tax? Well, one thing we know we need to do is you don't sell the coin, you don't sell the asset to the open market, and either you even trade it, like ETH or a decentralized coin to ETH, or that's going to create a taxable event. Mm-hmm. And so whatever you bought, let's say in her scenario, she had bought Bitcoin and her all-in cost was about 50 grand. Right. It goes 50 million. Well, she never, nothing's traded, nothing's moved. She didn't transfer it to another coin. And so the way that we do it is we actually have her transfer the Bitcoin itself to a newly formed trust, but she doesn't receive any cash back. She gets what's called a promissory note. She's become the lender. And since she's the lender, everything's in a tax deferred state. And so, and then she. But
are you swapping it? Are you swapping it to something once it hits the trust?
No, so once it hits the trust, we just sell it to cash. And so here's why it works, because the trust bought it for $5 million or received it for $5 million, right? Received the transfer and immediately sold it to cash, for $5 million. Yep. But it bought and sold for the same price. So at the trust level, there's no gain, right? And at her level, there is a gain, but she hasn't received any of the down payment or any of the cash for it. She's in a deferral state, and that's how it works. She'll pay tax slowly as she receives payments. It's kind of like a 1031 exchange. It's kind of like an IRA, right? You don't pay tax until you start receiving the cash flow from it. And so what she's receiving the cash flow, and she'll pay the tax on right now. So that's all happening. But the key was we didn't change the nature of the coin to cash until it was already transferred to this new trust, and that's kind of the secret of what we do.
That's very
and then cool. rinse, wash, repeat. So my question and my answer for you for that would be the airdrop. I don't know if the airdrop is changing the characteristic of the capital moving to either a different coin and or being construed as going to USD or different. So if it is, and it sounds like it is, then that it can be a taxable event. But that's something I'd have to look into and look at on a case by case basis.
Mm-hmm. Cool. Well, it seems like I got to get a trust situation.
Yeah, we can help everyone out. You can go to capitalgainstaxsolutions.com. That's capitalgainstaxsolutions.com.